Hello there traders, my name is Elizaveta Belugina. I'm the leading analyst at MBS, and today is our weekly webinar on the outlook for the Forex major currency pairs. Here we are. Today we will discuss the weekly forecast for the main currency pair. We'll use fundamental and technical analysis in order to produce some trade ideas. We'll also study the market's positioning on the basis of CFTC data. We'll study the economic calendar, the charts, and then summarize our trade ideas. As usually, we begin with the market's positioning, and you can remember that last time we were talking about the fact that the overall US dollar bullish position has declined, and this week we can see that according to the data for the week which ended on Tuesday, February 7th, US dollar net long position continued to decline. Actually, it fell to the lowest level since October. We can see that the rally in US dollar longs, which happened after Donald Trump was elected as the US president in November, was over, and now we are at the point where US dollar longs were before the US presidential election. As a result, this may mean that US dollar bulls have managed to survive significant correction, and now they may be able to reestablish their bullish position on the US dollar. There is a fundamental reason why such an increase in US dollar longs is possible at the current levels. As you may have heard, US President Donald Trump said at the end of last week that he will release a phenomenal tax plan in the next 2 weeks. As a result, we can see that the market players who used to buy US dollar in November and December on hopes that Trump will take fiscal steps to revive the nation's economic growth. These players who at the beginning of 2017 got disappointed in the US currency as Trump stopped talking about the fiscal stimulus. Now the expectations of higher spending and tax cuts are back, and this is certainly good for the greenback. And if we look at how the large players are positioned, they may be ready to once again start increasing their net long positions on the US currency. As for other major currencies, we can see that the largest net short positions are still on the euro and the Japanese yen. Next comes the British pound, and then lower bearish bets are on Swiss franc and Mexican peso. As for the single currency, we can see that the net short positions are slightly declining over the course of past weeks, but still the position is sizable. We can see that the euro is under great political risks. Still, the net short position on the euro is at the lowest level since June. And as there was some contraction in this net long position on the single currency, well, we can see that the euro is now more vulnerable to the downside. There was some short covering in the single currency, and now the players are at the levels where they can be more eager about selling the single currency and making new short positions. British pound, we can see that there was a small increase in the weekly bearish bet. All in all, we can say that both long positions on the British currency and short positions declined, and the market players decreased their net exposure to the British pound. This is partly explained by the fact that Brexit process is underway, and the Brexit bill has made its way through the House of Commons, the lower house of the UK Parliament, and now the discussions in the House of Lords will begin. But it's more or less clear that Theresa May will likely manage to accomplish this Brexit bill by the end of March, and will be able to finally trigger Article 50, informing the European Union officially that the UK will no longer be a part of this union. As a result, traders remember that Brexit means uncertainty for Britain, means problems for British economy. These problems will take place in the long run, not in the short term, but still, this is what makes large speculators turn from British pound to some other investments, like, for example, gold, or even some commodity currencies are still feeling better than currencies like the euro and the British pound. Investors slightly increased their net bullish bets on Canadian dollar. The bullish position here is increasing, though it is still rather small. And also we can see that there was a small increase in Australian dollar long positions. New Zealand dollar has switched from net shorts to net longs, but still here the picture looks more or less neutral. We can't say about New Zealand's dollar that the market is positioned this or that way. There is no clear dominance, neither of the bulls nor of the bears. This is how the market is positioned, and I repeat, the main idea is that US dollar has survived a significant correction, and after this correction, the bullish trend may continue. Let's have a look at the chart now. We analyze the daily US dollar index chart. US dollar index is tracking the dynamics of American currency versus the 6 currencies of America's main trading partners. And daily chart shows us that actually in February, American currency managed to recover. The last week was positive for the US dollar. 100-day moving average acted as support, and after testing 99 points, US dollar index managed to turn higher. Here we can see that US dollar retraced 38.2% Fibonacci of its advance since May to December to January, and now it is trying to return higher. The main resistance is located at 101 mark, and a bit higher around 50-day moving average in the area of 101.40, and the biggest resistance is probably located at 102 mark. As long as we trade below 102 points, we will still think that US dollar hasn't been able to gain full strength and will be still vulnerable to the downside. But above 101, the odds are that we'll test 102. So 102 is probably the area, the bullish area, where we can target the US dollar if there is a confirmation of a rise above 101 point. We can see that on Friday, the US dollar index formed a shooting star candle. Today, the index opened with a gap to the upside, but then closed this gap. So some negative pressure on the US dollar in the coming sessions is quite possible, but all in all, we will be watching for an attempt to get above 101. In the short term, the 100-day moving average around 100 points will be our main target of the near-term correction to the downside. And what else can we say here about the US dollar index? I think that so far this is it. If I remember something, we'll return to this instrument. Let's now say a couple of words about the economic calendar before we plunge into MT4 and the various charts. I think that this week is slightly less intense in terms of economic data than the previous week, but still we have some important events. One of the main events is the testimony of the Federal Reserve Chairwoman, Janet Yellen. She will speak to the lower and the upper house of the US Parliament on Tuesday and on Wednesday. Also, a couple of nations will release labor market figures, Britain on Wednesday and Australia on Thursday. Also, we'll have GDP figures for the euro area as a whole and for Germany as the leading economy of this union. On Tuesday, we'll have inflation data from China and Britain, consumer inflation on Tuesday as well, and producer prices index from the United States on Tuesday. On Wednesday, we'll have consumer inflation from America, as well as the retail sales and industrial production data. So together, the comments from the Fed's chair Yellen, this will certainly kind of form the market's expectations for the Federal Reserve's policy. For now, traders and analysts think that the most likely term when the Federal Reserve will raise interest rate is in June. So meeting in March is not actively discussed as the time for potential rate hike, because we know that at the latest meeting, the Federal Reserve made a more moderate, more cautious approach. As a result, there is still potential for US dollar increase if Yellen sounds more hawkish this time, if Trump says more about his fiscal stimulus, and if this data, US CPI, retail sales, industrial production, building permits, Philadelphia Fed Manufacturing Index, and unemployment claims on Thursday, if all this data come positive. So in these terms, US economic calendar this week will be rather important. Also, something I haven't mentioned, New Zealand will release retail sales on Thursday, and Britain will release retail sales on Friday. So we can see that Donald Trump and the Federal Reserve are the main important factor for judging the further dynamics of the US dollar. Now let's have a look at other currency pairs, and we start with euro dollar. If we look firstly at the weekly chart, we can see that there was a sizable weekly bearish candle formed formed last week, and actually this candle engulfed the body of the previous candle. It didn't engulf the whole candle, but the body it did engulf. As a result, the weekly pivot points indicator shows us that the pair is now trading in the negative territory below the pivot point of the weekly analysis at 106.79. The first weekly support, according to this tool, is located at 105.67, and the second weekly support is around 104.95. So we target approximately areas like 105.60 and 105 to the downside. 105 is surely a psychologically important level for the single currency, and this level has already acted as important support and resistance level before that. We can see that here around 105 is the minimum level of the 5th of December, and late November minimums are also not far from this level. So I think that if we get at this point of 105, it will take some time for bears to try to get past this obstacle, past this support. But before we got there, we can see that the pair is currently supported by the area of 106. Approximately here lies 50-day moving average. The line is almost horizontal, and it is providing some support for the pair. On the upside, another daily moving average is acting as an important level, and this time this line is acting as resistance. I'm talking about this green line, which is 100-day moving average, and which also corresponds with the weekly pivot resistance level located at 107.51. In my opinion, this is the upper border for the euro this week versus the US dollar. So I don't think that we will be able to get higher past this point. All in all, daily indicators show us that the pair is able to continue its way to the downside, although stochastic has reached low levels, and the pair may spend some time above this 50-day moving average before we'll get another swing to the downside and test off this bright blue weekly support levels. We can have a look at the 4-hour chart of the euro dollar as well. The general idea here is that the pair has breached the trend line last week, the trend line of January, and is now able to descend lower. We can see that there is the negative intersection of the moving averages on the 4-hour chart. The 50-period moving average, the brown line, is getting below the green moving average, the 100-period line. The pair is trying to recover and get above 200-period moving average, but for now we can see that it lacks momentum and is unable to close significantly higher. The previous candle on the 4-hour chart has a long upper shadow, a long upper wick, which shows us that there are sellers present in the area of 106.60, and here we find the short-term resistance line. A break above 106.60 will lead us to 107, and then the next resistance, and the big resistance will be located in the area of 107.70. Here it is. 1 hour chart. Well, here we can see more of this slow downtrend as well. This was the technical picture for the euro, and as for the fundamental picture, we can state that political background for the European region looks tense. Investors are still worried that a far-right candidate will win French presidential election and take the country out of the euro area. In addition, there were some sharp comments from German Finance Minister Wolfgang Schäuble, who said that Greece should leave the euro area if it cannot fulfill its bailout commitments. So, for now, the markets are not seriously concerned with Greece, but questions may once again arise as the nation is still struggling to make its way through the different negotiations and payments to its creditors. So this is like a sleeping volcano for the euro. The economic calendar, as we have already said, contains some releases of GDP, German economic sentiment, and European economic forecasts. Also, the European Central Bank will publish accounts of its last monetary policy meeting on Thursday, and surely we will keep an eye on developments in the United States as well, like comments on Donald Trump and the Fed's chair Janet Yellen. So the main idea is that the single currency may try to consolidate above 106 for some time, but the next move will take the pair down to 105.67 and 105 areas. And if something happens and we see by any chance euro rising to 107.50, here is where we will look for a chance to re-establish our short positions, because we see that the daily 100-day moving average for the second time prevented the single currency from getting higher, and if once again the market tests this line, the odds are that they will likely get rejected to the downside. We now come to the British pound, and at the weekly chart we can see that the candle of last week has a very, very small body and a rather big wicks. It means that the market is not sure where to go. The pound doesn't have ability to get higher, but it still holds above support levels, and we can see the weekly pivot mark at 1.2470, and likely the British pound will continue trading around this level, fluctuating higher and lower from this point, but I don't think that on its own the British currency will find a way out from these levels. We can expect the main market mover for this pair to come out from the US this week, some comments from Donald Trump or Janet Yellen, but all in all, technically the pair looks like rather stable. This is what we can say on the basis of this information. On the daily chart, we can see that there are shadows, wicks of the candles, which show the pair's inability to get either above 1.26 mark or significantly below these moving averages in the area of 1.2430, 1.2415. So this is the picture. By the end of last week, the UK released the upbeat macroeconomic data, and US dollar was relatively weak, but having lost around a fifth of its value in the recent years, the pound has become tempered of bad news and very responsive to good news. Still, the macroeconomic picture is not really well defined for the British pound, and the Brexit is the big factor which is not letting the pair to the upside. There were some hawkish comments from MPC member Forbes. But still, these comments failed to give significant bullish momentum to the pound. The main thing that they didn't let the British pound fall further towards 1.2230 and lower. They managed to make the British pound keep trading between 1.2415 and 1.26. Next week, we'll see inflation reports from both sides of the Atlantic. We'll see Janet Yellen and on Tuesday and Wednesday. Any hawkish comments from the Fed will be supportive for the greenback, and if Trump announces the details of his tax plan next week, it will lead to further appreciation of the US dollar. The Brexit bill is now in the House of Lords. They will discuss this Brexit bill for some days. So some comments of some policymakers in the UK will continue to affect the British pound, but once again, we don't see any defining fundamental reason for this or that trend. As a result, let's have a look at the 4-hour chart. We can see that there was a higher high, but then there was a lower low, a lower high. So all this movement of the British pound is kind of uneven, and it doesn't show us that the pound is ready for the break to the either side of the equation. But I think that the British currency will trade closer to the lower levels, and the biggest pressure will be on support located around 1.2360. If we see a break of this level, then we'll target levels around 1.2236. And final weekly support is located at 1.2125. So we expect the neutral sideways dynamics for the British currency, but I think that it will be more vulnerable to the downside, and by all means, the British pound is not ready to overcome significant resistance in the area of 1.27. Let's have a look at the US dollar Japanese yen currency pair. The pair tested the lowest level since the end of November, but then managed to recover. The Bank of Japan had to increase its buying in the super long bonds on Friday in order to keep rising yields in check. Such policy is reining in the yen's appreciation, but at the same time, some experts are concerned that it may become difficult for the Bank of Japan to take any easing measures in future, and an idea that will likely limit the dollar yen's ability to strengthen. So we can now see that dollar yen is trading inside this big Ishimoku cloud on the daily chart. The top of the cloud is located around 116.90, while its bottom is at 109.90. We are now in the middle here. The pair is also between 50-day and 100-day moving averages. 100-day average is having the bullish bias. So we think that after the pair managed to return above 112.35, it may try to test higher levels around 115.50 and 116. There is some seasonal negative pressure on the pair because of cash repatriation of Japanese yen by Japanese investors, but if the market remains optimistic about Donald Trump's policies and about the US dollar, then the pair will have a chance to get higher. The meeting between the US President Donald Trump and Japanese Prime Minister Shinzo Abe went rather well. We didn't hear the critics from Trump about the levels of Japanese currency and the fact that Japan is trying to make Japanese yen decline deliberately. On the other hand, Trump sounded rather peaceful, and this helped the US dollar. Also, we can see that the pair is now trading above resistance line of January, and if you look at the daily chart, but we still haven't seen a Japanese candle close above this line. So conservative traders might want to wait for the confirmation. On the 4-hour chart, the pair is trying to settle above the former resistance and now support line. Still, we can't say that the pair is having significant bullish momentum, and any attempts of the US dollar to get higher towards 115.50 will likely be very, very difficult. As I have mentioned that there are seasonal and other factors which are acting against the US dollar versus Japanese yen, then if you like to have a bullish bet on the US currency these days, probably you would better like to bet against the single currency than against the Japanese yen. So trading euro dollar looks more simple and technically well better defined than trading US dollar Japanese yen. At 1-hour chart, we can see that moving averages are having a bullish bias, but MACD indicator doesn't confirm these recent highs. So the pair is facing the first weekly resistance at 114.16, and it will take some time before dollar yen will be able to get past this resistance. Maybe some kind of wedge will take place, and then the pair will once again test their weekly pivot and now support at 113 mark. So the main idea is that the pair is consolidating above the former resistance line from January in the area of 113, but below significant resistance at 114.16. and some further resistance levels are not far ahead for the Japanese US dollar, Japanese yen. And another currency pair I wanted to discuss was Australian dollar, US dollar. Here we can see that the pair approached 0.77 mark, but we don't see the enough bullish momentum on the daily chart for the pair to overcome this level. We can see that earlier this area between 0.77 and 0.78 provided great resistance, and in my opinion, long positions here are not really preferable at this point. If we look at the weekly chart, we can see that last week the pair failed to get higher. There was a very small body of the candle, and now this week Australian dollar is surely vulnerable for retracement to 0.76 at least, and probably even to 0.7520 mark. So we will be watching this pair. More than that, stochastics is in the two overbought area on the weekly chart. New Zealand dollar. Here we can say that there was an abrupt turn from 0.7350 mark. New Zealand's dollar declined after the Reserve Bank of New Zealand killed hopes for a rate hike this year. The Bank of New Zealand's monetary policy statement noted that exchange rate remains higher than it is sustainable, and that a depreciation of the New Zealand's dollar is needed to revive the country's economic growth. As a result, the currency slumped to the area of 0.7170 after the announcement, and is now trading in this area. We can see that there is some support located around 0.7175, 0.7150, but below this level will target levels around 0.7070. This is a 50-day moving average. So this is a really viable target for the New Zealand's dollar in this week. We can also use Fibonacci instrument in trading to take Fibonacci from December low to February high. We can see that now the pair is supported by 38.2% Fibonacci retracement, and this way the main levels to focus on are located at 0.7117 and around 0.7060. Also, there is a big confluence of the moving averages around 0.7130, 0.71. They may provide some support for the pair, but all in all, these moving averages are horizontal, and the pair is returning to these moving averages after it made the swing to the upside. Now it is returning lower and may even try to test levels below these moving averages. Resistance for the pair will be located in the area of 0.70 to 50. We'll watch data from the United States and some figures from the New Zealand, like retail sales release. Traders may also have a look on such assets as gold. Looking at the daily chart, we can see that this asset, although has some correction currently, still will be able potentially to continue its advance. Support is located at 12.20, but we can say that the daily indicators point at a bit lower levels. And the 4-hour chart of the instrument has support around 12.26 and support of the former highs around 12.19. Probably the current level is not the best to enter a long position. We need to wait for some retracement to these levels of support, which are seen on the chart. As this week we may see some increase in the US dollar, and we have to wait with the long position on gold before that actually happens. And one final pair to have a look at is US dollar, Canadian dollar. Here we have a lot of lines at the chart, which make our analysis a bit more complicated. We can see that there is a series of lower highs in the US dollar, Canadian dollar, but still the pair has significant support around 1.30. Canadian dollar is helped by higher crude oil prices. And today, the Organization of Petroleum Exporting Countries will release its statement, its report, and we will see that the OPEC members really stick to their commitment of cutting production, cutting their output. While the members of OPEC are reducing their production, American oil producers are increasing output, so we don't think that the rally in oil is sustainable in the medium term, but still think that there is a chance for the US dollar, Canadian dollar to test 1.30 level, as last week the pair failed to close above the weekly moving averages located around 1.31 mark. So a slight test of 1.30 may happen, although stronger US dollar will likely struggle in order not to go below this point. This is it. Now let's have a quick review of the trade ideas we talked about today. So the main thing is that the euro dollar is vulnerable to the downside. If we see the pair decline past 106 mark, then we will target 105.60 and 105, which is a psychologically important level and where the bears will have an obstacle. On the upside, any bullish movements of the single currency should be limited by resistance at 107, 107.70, and if euro dollar by some chance managed to rise to 107.50, we'll be looking for a chance to sell the pair. Otherwise, we'll sell on the break below 106 mark. British pound is in the kind of fundamental uncertainty when investors don't want to be involved with the British pound, but it is still able to hold as British economy is actually in a rather good shape after all. So the main levels to watch on the downside are still levels at 1.2430, and a decline below this point will open the way down to 1.2360, and potentially below that level we'll have the target at 1.2236. But taking into account the volatility which exists in the British pound, taking into account last week's experience, then after decline to 1.2361, the pound flew up to 1.25, I think that the pair won't be able to get much farther from the current levels, and this is why even if we are selling the British pound or where we are buying the British pound, we don't need to have big take profits here because in the current situation that will be risky. So here resistance is located around 1.26 and 1.27. We have these big figures which prevent the British pound from significant depreciation. US dollar Japanese yen is trying to get higher. There were some positive signs for the greenback, but still it's seasonally a good time for Japanese yen, and it's trying to strengthen on its own. So any attempts of the pair to get towards 115.50 won't be easy. There won't be strong bullish momentum, and a dollar's way to the upside will be difficult. So this is a tricky pair to trade right now. Australian dollar, US dollar has approached significant resistance in the area of 0.77. So we expect a retracement and have a look at 0.76, 0.75, 20 on the downside. And for the New Zealand dollar, a decline to 0.71, 17, 0.70, 60 is quite possible. This is my outlook for this week. I thank you very much for your attention and wish you a profitable trade. We'll discuss the developments of the Forex market next Monday. My name is Elizaveta Belugina. I'm the head of analytical department at FBS, and I hope that my presentation was of value to you today. Thank you for your attention and see you next Monday.